Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Tuesday. It's March 15th. It's about halfway. This is the beginning of the third week of March, actually. Can't believe the month is halfway over. I'm still figuring out the winter's coming, and I'm realizing it's almost over. My God, where has it gone? It's about 7:46 in the morning. Market's going to open up in about an hour and 44 minutes or so, give or take. And as you can see here, the markets are actually kind of mixed. The NASDAQ front month is up. The NASDAQ back month is down. The S&P's meeting us in the middle, and the Dow's up 23 points. This is a definition of a fragmented market that just doesn't know what to do with itself. I mean, we've got COVID cases increasing in China. We've got war between Russia and Ukraine. We've got commodities and basic material stocks in a question mark right now. I'm going to say this is one of the most confusing markets I've ever seen in my life, and I've been doing this for 28 plus years. But let's try to get into it and make some heads or tails out of it, because one thing we know for sure, the indicators that have worked for the last 28 years will continue working. So let's see what's going on. So number one, we've got FOMC starting today. We're going to have a decision tomorrow. The Fed is slated to raise rates. It would be interesting if they did not raise rates, and I wouldn't be surprised if they did not raise rates because of the war right now and the economic conditions in China with the onslaught of COVID once again. And again, usually during times of war, they're not going to raise rates. But if they do, the bond market has assimilated most of it by a good margin. Just take a look at this. The bond market has been going down, even though, look at this, 3 handles yesterday. The bond market has been going down almost every day, including when the stock market is dropping. So this right here, this long-term trend is definitely pricing in the fact that the Fed is raising rates. I mean, look at this. From 155 all the way to 131. That's huge. So I think that's priced into the market. I'm waiting for a nice juicy rally up to the high 130s levels, and I'm going to short it right there. Would like to see it near the 142, but don't know if that's going to happen anytime soon. But I am looking for a short position in the bond market. Now, let's talk a little bit about economy here. We've got Redbook, which is same-store sales today. Private report will give us a good idea of where retail sales will be. Retail sales may be able to cause a rally if the numbers are better than expected. Today, the big report on Wall Street is going to be the PPI, and typically, I don't know about right now, but typically right before the FOMC, the market gets subdued. We're looking for a producer's price index number of 1% consensus. The year-on-year, 10%. Can you imagine producer's price index 10% more? So if the number is lower than 10%, it means the inflationary pressure isn't hitting producers that much. If it is, then it's a problem. Because again, and if you look ex food and energy year over year, 8.3%. That's a huge inflationary number. So let's see if the number is getting hotter or if it's cooling off. If it's cooling off, then inflation is falling back, which is what the Fed is hoping will happen, but I don't think it will, not on its own. Another major report after the FOMC and after retail sales this week is the housing starts, industrial production, and manufacturing. I don't think housing is the big deal right now. I don't think housing is driving this market. I think right now, COVID, the war, and the Fed, definitely inflationary pressure, which is why you have to look at the manufacturing and industrial production with the PPI. Because if industrial production picks up really hard, it'll cool off some of the inflationary pressure. And also import and export prices are very important right now. But again, the biggest report today is going to be the PPI. And then tomorrow, the biggest report is going to be the retail sales and, of course, the FOMC, where you got to keep your eye on the bond market. If the bond market rallies from here on, it means most of the what the Fed wants to do, which is raise just by 1/4 of a point, is already priced into the market. There's no surprises at this point. And I think, honestly, the trend this is a pretty mature downward trend, and we are due for a pullback to the upside. Now, put the call ratio is still favoring a turnaround to the upside in the stock market. This is telling us the market is oversold and needs to rally, all right? So we do really need to rally behind it. And let's see what happens after I talk about the news. I'll get into some important levels. World shares fell again. Hong Kong down almost 6%. That's a big chunk of the financial market. Shanghai sinking 5%. Virus lockdown. Real simple. We've been here before many times. I honestly thought I wouldn't be talking about COVID again, but here we are. The sell-off gathered pace late in the session despite the release of data showing strong increase in Chinese retail sales, industrial production, and investment in January, February, which is interesting. It followed a decision by central banks not to ease interest rates to spur economic growth. Well, we may be doing the opposite. We may be not raising rates tomorrow to deaden economic growth, okay? So things may work. So I would be very cautious. The Fed may say we're going to wait till this war is over and what's going on with China. Let's give it another month. I don't think that's going to happen, but if they do, we're gonna have a strong rally in the stock market, and they are interested in keeping this market strong. Prices of oil and commodities slid again. I think the market is starting to assimilate the beginning of the end is here to this war. Anxiety over the war in Ukraine and upcoming Federal Reserve meeting on interest rates is keeping markets on the edge. That is such a true statement. Oil prices tumbled from 130 all the way to 100, and we may have a little pullback, but I think the top may be here. I called for oil to be up to 120. Some traders said 150. I was at 120. We went to 130, but I think the top is here. London Metal Exchange said nickel will resume trading on Wednesday, just a week after it was suspended over the price skyrocketing to over $100,000 per ton. Russia is the number 3 producer of nickel. Its price and that of many other commodities have surged on speculation over possible disruption to supply as Russia continues playing its game with Ukraine, which is just horrific. Federal Reserve is expecting to raise its short-term rate by 1/4 percentage point tomorrow in its first increase since 2018, pulling the federal fund rate off its record low of nearly 0. That's going to be very interesting. Now, the number of stocks in the NASDAQ trading above the 50-day moving average right now is 17. And look at this. We're turning right here. It looks like we're turning. Now, we could go a little bit lower, but folks, we are getting really low, close to the low. Now, you may be sick and tired of me saying that, but, I mean, we don't have a really solid time for when it happens. But usually, these turnarounds don't last very long. And it looks like we may be getting ready for one, or maybe a little more downside and an upside. But I think the bottom of the market is fairly close to being here. Now, with that said, as I mentioned, the fact that we're oversold and the fact that the put-to-call ratio is grossly overbought is telling me that the markets are going to turn positive. And when you look at the number of stocks trading below the 200-day moving average, which I'll look at in a second here if I can get there. Here we go. You'll see that it's 19%, and it's not much higher than the number of stocks trading above the 50-day line. So look at that. Look at where we're at right here. This is COVID. This is 2018. How much further are we going down? I don't think so. I think we're there. I honestly think we're there. I mean, look at this. This is a historic moment here. Let me go to a longer chart. This is 2008 crash. So if we break these levels, we're literally going to go down to the 2008 crash. And even then, we didn't stay at these levels very long. Also, I want to show you guys something important. I was showing this to my group yesterday. Look at this is ARK Fund. This is Kathy Woods. This is all the speculative stocks. Take a look at this. They look like they're near their base, the pre-COVID levels right here, right? And when I was looking at the stocks that she was holding, I also noticed like Teladoc, Roku, Zoom, look, TDoc, they're all at their base. They're all at their base. Look at that, even below the base. That's TDoc. What was the other one? Roku. Oops, Roku. Let me go to Roku. Can't spell this morning. Again, look at where we're at. We're back down to the base. What was the other one? Zoom. Look at Zoom. We're back down to pre-COVID levels. So again, we're down to pre-COVID levels. That means all the junk stocks are back down to their base. Put the call ratio, momentum levels are telling us we're way overdone. The bond market has gone down. I mean, look at this, from 155 to 132, which is a good 15-20% move in bonds. And The number of stocks is trading below, and momentum levels. Where's that momentum level? Let me go there. The put to call ratio. Whoops. So again, all of this is telling me that we're not down here, we're up here, which means the markets are grossly oversold, which is telling me markets will probably bounce hard. Now, looking at each individual sector, healthcare looks like it's basing out. Consumer staples looks like it's way overdone to the downside. Utilities looks like they have peaked out. Energy looks like it may come down a little more here before it bounces, but it looks like we're definitely going down. Real estate looks like it can stay choppy. Basic material looks like it can be going higher from these levels. Industrial looks just like basic materials, like it can go higher, like this is a double bottom here, and it can go higher from these levels. Financials looks like they're bottoming out right here. Communication services looks like it just went down for another leg. And consumer discretionary looks like it's basing out right here. Look at that, 3 bottoms. So keep your eye on consumer discretionary, and tech looks like it's bottomed out as well. So the market looks like it's bottomed out. If you want some specific levels, here are some levels, and you got to look at consumer discretionary. The levels I'm looking at right now to the upside are, well, let's start here. 174 on the XLY, and then 180. If we can break those levels, we are going to go higher. Now, before I let you go, I've got something important for you. And by the way, I was going to tell you the number one sector, number one stock. Let me do that right now. So, number one sector is going to be energy still. The worst sector is going to be communications. And the number one stock is going to be Occidental Petroleum right now. But honestly, because energies are selling off, I would go with something like Mosaic, MOS, or CF Industry, because these are more industrial basic material stocks, and those can still heat up where oil may be overdone. But these 3, Oxy, CF, and MOS, look good. On the downside, PayPal, Moderna, Align Technology, these 3 right here, and Etsy. So be very, very cautious, because a lot of these stocks look like they're bottoming out, and a lot of these top stocks look like they could be coming down a little bit. So be very, very careful, because markets feel like they're bottoming out right now. Everything is pointing to it. Now, before I let you go, folks, I need you to pay attention. New Money Crew head trader Lance Ippolito, he's back in the spotlight with a great new opportunity. It's an obscure Wall Street trick that's very few retail traders know of, and even few know how to use it correctly. And it's about to change, because Lance is about to pull back the curtain on one of the most exciting trading discoveries of the century. Again, Lance Ippolito, he's back, New Money Crew head trader. He's got a new trick for you, and he's ready to pull back the curtain on one of the most exciting trading discoveries of the century. Click the link below to uncover it right now. And folks, the timing for this literally could not be better. Tomorrow, I'm going to give you one long, one short, actionable trade idea. Don't miss out. Red meat coming your way tomorrow. Follow the link below to check out what Lance has in store for you. This is groundbreaking stuff. You guys are going to love it. Bye. Have a great day, and send me some feedback. Support at marketgeeks.com. Bye, guys.